So, welcome to today's presentation. My name is Peter Yusuf, Senior Market Analyst at IronFX. We're going to be mixing technicals with fundamentals. In front of your screens right now, you have your USD's daily chart. All charts to be presented are to be of the same time frame. Now, today I think the big question would be the release of the US CPI rates for June. The release seemed to be hyped by media over the past few days and is expected to gain substantial attention. For the time being, we note that forecasts tend to highlight the possibility that the headline CPI rate of the US is expected to slow down for June, while the core rate is telling us a different story. It's expected to remain unchanged at 3.4% year on year, and that may be sending some mixed signals to the markets. Overall, should there be a failure of the CPI rates to slow down, that could imply stubborn inflationary pressures within the US economy and actually force the Fed to remain more hawkish than it maybe even wants to be, possibly also implying that it will be keeping rates high for longer. So that's one issue which I think will be the key release of the day and could affect not only the FX market, but have ripple effects also beyond the FX market on gold's price and US stock markets. In that case, should the US dollar start weakening, i.e. in case, say for example, that the US CPI rates for June slow down, maybe even a little bit more than expected, in that case we may see gold's price gaining some support, with similar effect also being expected for US stock markets. On a technical level, Euro USD has clearly now breached the R1 1.0815, and that has to be turned down to support line. That's clear as light. Let's go hunting for a new ultimate resistance line. I'm highlighting this peak here, and that would be in red the 1.098 resistance level. Could go a little bit, a few pips lower, but it's a nice round figure. I'm keeping it. The R3 now is being transposed, sorry, the R2 is now being transposed to the 1.0915. The R1 at 1.0860. The S1, so the resistance line now forms a support line at 1.0815. The S2 at 1.0765. Sorry, and the S3 at 1.0720. Locking everything in. That's it. So we tend to maintain a bullish outlook for Euro USD, and I think that has more to do with USD weakness rather than Euro strength. In my opinion, the bullish outlook is being supported practically by two indicators. A, it's the upward trend line, which was initiated on the 26th of June and practically intensified on the 3rd of July. There was some slight stabilization at the start of the week, but the bulls seem to be refining their way. Next possible target for bullish outlook would be the 1.086 resistance line. And should the R1 broken, we set the next possible target at the 1.0915, a level which was able to reverse the upward motion of the pair on the 4th of June. On the flip side, should the bears take over, we would expect the price action to breach the pre-mentioned upward trend line. That would be the first signal that the upward trend line or the upward movement has been interrupted. For a bearish outlook, though, that would not be enough. We would also require the pair to breach the S1 1.0815 and start aiming for the 1.0765. In case of a sideways motion, expect the pair to breach the prementioned upward trend line, but at the same time, I wouldn't expect the pair to escape the boundary set between the R1 and the S1. So it would be a formation something like this. Let's have a look at USDJPY. USDJPY, which at some point seem to have some bullish tendencies. Allow me to delete the OBV indicator on balance volume. Again, that provides us with a clear picture for the RSI. Let's reposition also the labels so we get a more clear picture here. Volatility regarding USDJPY has been reduced substantially. It's understandable that the hesitation of the market to actually push the pair even higher is evident. It's characteristic that today it seems to be correcting a little bit lower. And the sideways motion just above the 160.20 support line seems to be maintained. On the flip side, we have to note that the price action is moving in an upward channel and has still some distance between the price action and the upper Bollinger Band, allowing for some room for the bulls to play. Also note that the RSI indicator is running along the reading of 70, implying a rather strong bullish market sentiment. Yet that has still to be expressed in the price action once again. For the time being, I maintain a bias for sideways motion, and for bearish outlook, I would require the pair to actually drop below the S1 160.20 and start aiming for the 157.70. On the flip side, should the bulls take over, I would require the pair to breach the 163. Actually, one could argue that the bullish outlook could start even with a higher peak than this one. And it's actually at that level right now. You can see it. And in that case, I would require also some distance above the peak. And that's why I'm setting the 163. If we drill now into the 1 hour chart, we get a different picture. And it's an interesting one in the following sense. Sorry, 4 hour picture. That's even better. Note that we have an upward movement, a peak, a correction lower, a trough. The pair rises, seems to be peaking at nearly the same levels as the previous peak. And that starts actually forming the question on whether we have an M formation that works here, which is quite possible. In my opinion, that would be verified once the price action breaks below the trough here. So it has to breach below the 160.20 support line. Back to the daily chart. We're adjusting it. Sorry. So should the bears take over, I would expect the price action to drop, break the S160.20 and start aiming for the S257.70. However, we have to note here that such a movement for the time being is not expected within a day or two. It may take a week. On the flip side, should the bulls regain control, once again, I would expect the price action to breach the R163. Our outlook for the time being remains sideways until any of the two pre-mentioned levels has been broken. We maintain a sideways motion bias. Let's have a look at GBP USD, a very interesting pair. Here you go. Now, if you watch the movement of cable, it's a very similar movement to Euro USD. Me too. There you go. You have a steep upward movement, a relative stabilization at the start of the week, and the bulls regaining control over the pair since yesterday. That's cable. Let's have a look at Euro USD. Once again, strong upward movement, some stabilization at the start of the week, and regaining momentum for the bulls yesterday and today. In my opinion, though, there is a difference here. The difference is that the price action is moving upwards in a steeper fashion. That's one. Second, if you have a look also at GBP JPY and Euro GBP, you will see that the pound is gaining against those pairs as well. So in this case, it's not only a USD weakness, it's also a GBP strength. So more or less, we highlight the bullish outlook for the pair, and we're basing the outlook A on the price action being supported by an upward trend line. And I would be also noting here the RSI indicator, which is nearing, actually has almost reached the reading of 70, implying a strong bullish sentiment on behalf of the market. There is a small catch here which is worth mentioning, and it's the fact that today the price action has breached the upper Bollinger Band. And that may slow down the bulls, maybe even cause a correction lower. As for where it could go, definitely we have to reposition our resistance support lines. The R1 has to be turned into a support line. And let's go hunting for a new R3. It's a beautiful peak here. You can see how the upward movement found the total ceiling, hit it, and corrected lower. It's a very clear case of resistance here. And that would be the 1.3140 resistance line. In red, please. Yep. Let's correct also the labels, repositioning the chart. Here we go. We corrected even the S3, setting it a little bit lower. Starting with the S3 now, instead of 1.2620, I have corrected it lower to 1.2615. The S2 is at 1.2740, that's pretty clear. The S1 at 1.2810 could go up to 1.2815. Locking everything in, moving to the resistance lines. 1.2890 being the first resistance line and the next possible target for the bulls. The 1.2995, we're talking about 105 pips higher, is the R2. And the R3 with some distance to cover is being set at 1.3140. Okay, So once again, we maintain a bullish outlook for the pair. I would like to note here that GBP seems to be supported on a technical level, but it's not only that. We have also support for the pound on a fundamental level. It's characteristic that today we had the release of the UK GDP rates. They were for May, and all the rates year on year, 3 months on 3 months, and month on month accelerated beyond market expectations. And that tended to brighten the outlook for the GBP on a macroeconomic level. It's supportive for the pound. The second issue I would be highlighting on the fundamental basis would be the new Labour government. The new finance minister, Chancellor of the Exchequers, that's the official title, Mrs. Reeves is more or less, MS Reeves, is more or less actively pursuing growth for the UK economy, and or at least seems to be actively pursuing growth. And that tends to be encouraging for pound traders. One small catch on the fundamental basis for the pound would be monetary policy. We got some conflicting messages yesterday from BOE policymakers. We had BOE chief economist Hugh Pill. Now, Mr. Pill practically recognized that rate cuts are on the way. However, at the same time, he also mentioned that the timing of a possible rate cut is still open. On the other hand, we had also BOE Monetary Policy Committee member, Mrs. MS Catherine Mann. Now, she stated, and that was a very different narrative, that she still sees inflationary pressures, she mentioned them as price pressures in the UK economy. And that tended to imply that the need to keep rates high for longer is still present. So, on a fundamental basis, let's sum it up. We have macroeconomic supporting the pound, as the UK economy seems to be more decisively moving away from a possible recession, even a technical one. B, you have the political scene in the UK, which is now rather stable, and the new UK government seems to be more actively chasing after growth rather than austerity as such. And we're getting mixed signals from the monetary policy. That more or less, in my opinion, tends to support the pound. That's 2 to 3. Despite actually monetary policy may be playing a bigger role here. But even in that case, should BOE proceed with 2 rate cuts within the year as the market expects it to, I think that would be, or if you prefer, that would keep interest rates in the UK at a higher level than possible 2 rate cuts by the Fed or the ECB. So actually, even with 2 rate cuts, the pound may still be supported. Last but not least, a small, I wouldn't say detail, but interesting element here would be the fact that within the BOE balance of power, the doves seem to be gaining more ground, or at least the idea of rate cuts coming is gaining more ground. So keep that in mind before we move to gold's price. Gold's price, which edged higher yesterday. Let me reposition the labels a little bit. On the one hand, the upward movement of the past few days, as underscored by the upward trend line, seems to maintain a bullish outlook for gold's price. That would be understandable. On the other hand, though, I'm not convinced yet. Why? Because I still see gold's price moving within the boundary set of the sideways motion. That would be the R1 and the S1. So for bullish outlook, I would require the pair to breach the 1.2392, sorry, the 2392, and start aiming for the 2415. On the flip side, for a bearish outlook, the pair has to breach the prementioned upward trend line, but also breach the S1. I would require a lower trough than these four here for a bearish outlook for me to be valid. Note though that the RSI indicator is above the reading of 50. It's not quite at 70. It's actually at 63 if I'm correct. Let's have a look. 61.2, sorry, 62. So there are some bullish tendencies within the market for gold's price, which could provide some support. On the other hand, note how the median of the Bollinger Bands, which is also the 20 moving average, has flattened out. And that tends to imply that the direction has shifted from upwards to practically sideways. It's going to be interesting. Another small look at US stock markets, and I would be highlighting here the Dow Jones. Dow Jones, which tended to gain some support yesterday. Note the clear-cut green candlestick, but it remains within the boundaries set by the pre-mentioned upward trend line. It's a channel. If we move to the 1 hour chart, I think that would provide us with more clarity. Yep. It seems to clearly break it above it, but stabilizes. It's not, there's no continuance of the upward movement. So back to the daily chart, shifting a little bit higher, the upper boundary. We tend to maintain a bias for a sideways motion. And for the bulls to take control, in my opinion, we would require the pair to actually breach above it, and I would require a higher peak than these ones. So the pair has to breach above the 40,350. A totally different picture may be provided, give me a sec, by Nasdaq. This is the weekly chart. Let's drill into the daily chart. Nice, intense upward movement. Note how the price action has breached, actually not in breach, has deepened its upward movement. That happened once on the 2nd of May and the third time on the 31st of May. We had a totally upward movement throughout June, maybe a slight correction in the last days of June, and the stabilization in the last days of June. And as July began, you can see it right here, a clear-cut upward movement, which tends to be supported on a fundamental basis by the expectations of the market about the possibilities of artificial intelligence. Now, in our opinion, once again, I mentioned this yesterday, and I'm sticking to my opinion, fundamentals in the US economy do not seem to be capable to support such an upward movement. So I wouldn't be surprised to see some correction lower. On the other hand, though, we have to note that the prospect of the Fed starting to cut rates may more or less provide additional opportunities for US businesses to make profits and expand the business, and thus provide more support for US stock markets. Nasdaq, which is particularly sensitive to tech sector, which in turn is very, or if you prefer, heavily leveraged, is very sensitive also to the level of interest rates. And in that case, should we see actually rate cuts coming in, I wouldn't be surprised to see additional upward movements. That would be a scenario which for the time being is also being playing out. Please note that US stock markets, at least Nasdaq, is reaching new record highs. So it's constantly in uncharted waters, pushing it higher. That should sum it up from all of us here at IronFX. Best wishes for solid trading.
Go ahead and get started. Okay, so I'm Melanie and I will be your speaker for today's webinar. So for today's session, we're talking about the second part of our Build Your Trading Strategy series. So today we're going to be focusing on day trading. Okay. Yeah, if you guys have any questions throughout the webinar, feel free to let me know in the chat. Yeah, I think that's about it. So before we get started, as per usual, a risk warning. So our products are traded on margin and carry a high level of risk, and it's possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. So a disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. So as per usual, I'm Melanie and I'm your speaker for today. I'm an investment analyst from Everest Fortune Group, who are finalists for Best FX and Equity Research in the years 2019 to 2021. Okay, so here's our agenda for today. So I'm just going to show you guys what are the key news events to look out for, or how you can implement them into your strategy. So this is based off of last week's news events, but I will show you guys this week's news events as well. I'm just going to use last week's as an example. Then we'll reference higher time frames, see which time frame you should use for day trading, identify momentum, taking a trade, and we'll go through a couple of basic day trading techniques. Okay, so let me know in the chat how many of you guys like to use or like to day trade. And yeah, let's just go ahead and get started. So this was last week's events. Okay, maybe I'll just make my camera smaller. Okay. So this was last week's events. You can see we like to use forexfactory.com. So let me just pull out this week's events. So this just shows you the medium to high impact news events. This is just how we like to use an economic calendar by comparing the actual and forecasted data to determine the outlook of the news release. So if you take a look at my screen now, right, when you go into forexfactory.com, it will give you guys, I mean, it kind of looks like this. So it'll give you all of the impact, all of the different impacts events, as well as today's events. But let's say if I'm looking at this week's events, so 23rd to 27th, you can see I have all of the events, and I like to click this filter. So as I mentioned earlier, we like to just look at the medium and high impact events. But if you are particularly looking at a specific currency or different event types, you can go ahead and adjust those as well. Okay, and then you can take a look and see all of the different events that will take place this week. So it's quite a busy week this week with a lot of events taking place. Yeah, a lot of PMI releases. Okay, so let's just get back to our slides. So it's important to use an economic calendar when you day trade, because day trading in particular, it will affect your trades. Whenever a news release is out, you could see it go up or down. So it's important to take note of your fundamentals when you are day trading. Okay, next, let's move on. So now we are referencing the higher time frame. So what we mean by this, okay, let me just pull out my charts to show you guys. Okay, so let's say if I'm looking at the Aussie dollar, okay, and I'm looking at it on the 4-hour time frame. Okay, so let's say if I want to um analyze this on the 4-hour time frame, I will go in with all of my trend lines, all of my the Fibonacci, so on and so forth. But I will also want to reference the higher time frames, such as the 1 day as well as the 1 week. Okay, so there's actually the reason for this is so that you can see what the general trend is. Okay, even on the higher time frames, because sometimes it does differ from between the time frames. So it's important to take a note of the different time frames, especially the higher time frames. And there is a strategy. I don't know, can't remember right now who it's by, but there is it's like a factor of 4 or 6 or multiple of 4 or 6. In this case, since we are referencing higher time frames, you would the rule is that you will go up either by a multiple of 4 or by a multiple of 6. So 4 times 6 would be 24 hours. So then we will look at the daily time frame. And then the daily time frame times 6 is 6 days, but we don't have 6 days on TradingView. So closest will be 1 week. So that's why we look at the 1 week time frame. Okay, that's basically how it works. If you're looking at a smaller time frame, so for day trading, normally we look at higher time frames. But if you want to look at the lower time frames as well, it's the same concept. Instead of a multiple, you look at a factor of 4 or 6. Okay, I can't really remember who started this strategy, but it's quite a popular one to go by. Okay, so that's what we mean. So which time frame should you use for day trading? So before we get into that, okay, day trading, normally we use either the 1 hour, 4-hour daily time frames, depending on your preference, and also depending on which time frame gives you a clearer market structure. So this is an example of a clear market structure. Okay, this is excuse me, this is an example of an unclear market structure. Okay, you can see the markets are really choppy, and you can't really see the shape of the chart very clearly. Okay, so obviously, if you are looking at which time frame is the most important, if we're looking at the same chart, okay, this is on the M15, and you can see that it's really unclear. Okay, and this is on the 1 hour view, which is clear. Okay, so what I'm trying to highlight here is that it really depends on which time frame gives you the clearest shape or chart. Okay, and this is really important for so when you look for swing highs, swing lows, this is really important for your support and resistance levels, which obviously is important for your entry, your stop loss, and take profit levels, but it's also important for your analysis. So your Fibonacci trend lines would have to follow the shape of your chart. So the clearer it is, the more effective your Fibonacci will be. There's also graphical tools. So like you saw over here, I have a really nice descending trend line with a very clear market structure. Okay, and this is also part of graphical analysis. So it shows you the trend really clearly as well. So at the very basics, the clearer the swing low or swing high, and the clearer the trend between these 2 points, the more accurate your analysis will be. So apart from having your own preference on which time frames you like to use as a day trader, it's also important to take note of which time frame gives you the clearest market structure. Okay, so far, are there any questions? Okay, if all good, let's move on. Okay, so here's just a brief intro into multiple time frame analysis, since we are briefly talking a bit about time frames. So the multi-time frame analysis. Okay, thanks, Ben. So the multi-time frame analysis is a trading strategy that involves analyzing the market from multiple time frames, like I mentioned earlier. So this, as a beginner trader or even as an expert trader, it basically helps you to get a better understanding of the market and make more informed trading decisions. So the first step in this strategy is to select the timeframes to analyze. So typically traders will choose at least 2 timeframes. So there'll be a short-term time frame, so 15 minutes, and a longer time frame, which will be either 1 hour or daily. Okay, so the short-term time frame is used to identify the most recent trends and price movements, while the longer-term time frame is used to identify the overall trend and market direction. Okay, so I briefly went through all of these earlier when I showed you guys the chart. Okay, but yeah, so once the timeframes are selected, you can then analyze the markets from each time frame. Look for key support and resistance levels, the different trends, as well as patterns. So for example, if the short-term trend is bullish and the longer-term trend is also bullish, this could indicate a strong uptrend in the market. Okay, so as a trader, you can use this information to make more informed trading decisions. So if the short-term trend is bearish, on the other hand, because in this case we're talking about bullish. So on the other hand, of course, if your short-term trend is bearish, longer-term trend is also bearish, of course, you can probably expect it to be a strong downtrend in the market. Okay, but if let's say the short-term trend is bullish and the long-term trend is bearish, then you can make use of your different indicators and graphical analysis tools to help you to forecast where markets are headed. So it's a little bit more complicated for those. Okay, so overall, multiple time or multi-time frame analysis can help you as a trader gain a better understanding of the market and make more informed decisions by looking at the bigger picture and analyzing trends and patterns from the different time frames. Okay, so what should you look out for on higher time frames? Firstly, we have the key graphical levels. So these, we're talking about support, resistance levels. Next, we are talking about trend lines, trend channels, which obviously give you an idea of the trend. Next, breakouts. So by breakouts, we're talking about either breaking out the trend line, breaking out of trend channels, or different key graphical levels. Big moving averages. So if you make use of the 50, 100, 200 golden cross or death cross levels, the indicators, and Ichimoku cloud as well. So we can use the Ichimoku cloud to give us an idea of where prices are headed towards. So if price is moving below the Ichimoku cloud, it is a bearish signal. If price is moving above the Ichimoku cloud, then it's a bullish signal. Okay. Um, Okay, so next we have big Fibonacci levels like retracements, extensions, and projections. And lastly, we have price action. So what we mean by price action is basically looking at past, present, future momentums from the previous bar to dictate your strategy. Okay, so let's take a look at how we can identify momentum. Okay, okay. So firstly, let's look at the different momentum indicators. So the first one we're going to be talking about is the MACD, or moving average convergence divergence indicator. So I personally really like to use this indicator because at one glance it tells you exactly what the signals are. Okay, so it's, if you want to know the calculation behind it, it's basically works by calculating um by subtracting the 26 period exponential moving average, or EMA, from the 12 period EMA. So the signal line is a 9 period EMA of the MACD line. So MACD is best used for daily periods where the traditional settings of 26, 12, and 9 days is the norm. MACD triggers technical signals when the MACD line crosses above the sell line, the signal line, which would then signal that you can go for a buy, or falls below it, which is a signal for sell. Okay, so this uses three exponential moving averages to identify price movements. Difference between these averages is shown in a histogram. I'll show you guys in a little bit. And the movement can show whether a trend is strengthening or weakening. However, moving averages always lag behind price action, and they are more suitable for identifying entry points. So here is the points that I was talking about earlier. You can see the MACD line is the blue line, signal line is the orange line, and histogram is the red and green areas. And of course, the zero line is just over here. Okay. So the selling signal occurs when the MACD crosses over the signal line, or if you can see over here, it's also when our histogram is red. Okay, and yeah, so this is one of the trading strategies. So over here we have a buy entry. Okay, we're showing you the different buy entries that you can identify from the MACD. So you see price, or rather the signal line crossing over, and you also see this MACD histogram being green. So it's a huge bullish signal. And then once it crosses over again, it is a bullish signal here again. Crosses over, bullish signal, crosses over, bullish signal. You guys kind of get it. Okay, so every time there is a crossover, you can expect a change in trend. Okay, so if we look at the sell entry, same concept. Okay, it's just that when the signal line crosses over, then you see this red area. Similarly over here and here as well. Yeah, you guys kind of get it. Okay, but as I mentioned earlier, it is a lagging indicator like you see over here. So over here it says it's pretty green, and it doesn't cross over until after this drop. Okay, so just be careful or just be aware of that if you are intending to use this. Okay. Next, let's move on to a couple more momentum indicators. So I also personally like to use these two. Okay. RSI, let's start with that. So how it works is it oscillates between 0 and 100, with values above 70 considered overbought, values below 30 considered oversold. When the RSI value is above 70, it suggests that the security may be overvalued due for a price correction, potentially indicating a sell signal. When the RSI value is below 30, it suggests that the security may be undervalued and due for price rebound, potentially indicating a buy signal. Okay, I guess I'll show you guys an example. Okay, there's an example in the next slide. Okay, so stochastic oscillator readings more than 80 indicate that price is near its high. Readings below 20 indicate that prices are near the lows. A security is overbought when the percentage K line moves below above 80 and is oversold when the K line moves below 20. So this is an example here. In this case, we like to use hidden support and resistance levels. So for both of these indicators, in this example, we use stochastic, but you can also use this method for RSI as well. So for this method, you see that on our stochastic or RSI indicator, we have a hidden resistance level. Basically, all of the peaks are at the same level here. But you can see that on our price chart, price is making a higher high over here as well, a higher high. Okay, so what this basically means is that we can expect price to drop immediately after this, which is exactly what happened here. So once you identify these and once you identify price making a higher high on the second peak, whereas on our stochastic or RSI, it's giving us the same peak or the same level, then you can expect price to immediately drop after that. Similarly for over here. And in this example, we're also using stochastic, but here we are using a hidden support level. So you can see we have this really nice support level on our stochastic. But you can see on our price chart, price is near lower low. And over here, we have an ascending trend line. Whereas, of course, over here, we don't. So this suggests that we can expect price to continue to drop or continue to rise from the buy entry, or rather from our ascending trend line to the take profit. Okay, and you can see that's exactly what happened here. Okay. Okay, so if we look at bearish divergence on the other hand, here we have price, is this? Okay, so you see a descending, it's quite subtle, but you can see price is making lower highs on our RSI, whereas on our price chart, it's making, it's still a resistance level. Okay, so price is testing a key horizontal resistance level with price making a smaller high, resulting in bearish divergence with RSI. So bearish divergence, basically when it's RSI or stochastic, you see price making a descending trend line. Whereas on our price chart, it's kind of staying at the same level. That's basically what bearish divergence means. Okay, so our descending resistance line on RSI caught the past two reversals correctly over here. So you see there's two drops here. So we can expect that the third one, we would be seeing another reversal over here. Okay. Next, yeah, so this is just the example from here. You can see that price reverses strongly because of the horizontal resistance here, as well as the RSI resistance and bearish divergence. Okay, another example here, but this one is just on a smaller scale. So you can see that even if the difference in price is pretty small, it can also work. So for stochastic, it's giving us a lower high, and on the price chart, it's making a higher high. Okay, so yeah, so we can expect price to continue to drop. Okay, so you see the repeated pattern here, bearish divergence here and here. You see price drop here immediately after that. Okay, so it rises, and we see this price making a higher high once again, but on our stochastic, it's making a lower high. So we can expect price to continue to drop, or rather not continue to drop, but you can expect price to reverse from this point. Okay, and that's exactly what I did here. Hey, so divergence potential. So over here, we see price making a higher high, and on our RSI, price is making a lower high. So same thing, this is another example of a bearish divergence. First point, we want to always take note of where the bearish divergence started, as this is the level where it would tend to reverse to. Bearish divergence means price is making higher highs, RSI is making lower highs. Okay, so we can expect price to drop down here. And because this is a so if you were here for the support and resistance webinars, you would know that this is called a overlap overlap support. Basically, it's just when price respects the bulls and bears of this level here. So we basically have swing highs and swing lows that are touching the same level. That's just what an overlap level is. So then you can expect price to come back down and reverse off of it again, or react off of it. So you see here, it's a overlap support because we have swing highs and swing lows. You can see price did reverse off of it. Okay, forecasting breakouts. So we have this ascending trend line on our price chart, but we also have this ascending trend line on our RSI. But at this point, at this first column, price actually, no, RSI broke out of the ascending support line before price did. So this forecast that price might actually break out of it after this level here, which is exactly what happened here. Price broke. This is basically a predictor that like price is likely to break out of this ascending trend line. Okay. So here as well, in this case, we have an ascending trend line or descending trend line, but we are expecting price to break out of it and head upwards. So price is moving downwards here. This is actually not a valid trend line because you guys will know that a valid trend line requires 3 significant touches, whereas here we only have 2. But on our RSI, we do have 3, and that's why we're pointing it out. Okay, so we have 3 points making a valid trend line, and price RSI is breaking out of this descending trend line. Okay, so from here, price is breaking out of it, so we're expecting it to continue to rise. We're expecting this price to continue to rise and break out of this ascending trend line. Now we see over here that there is also bullish divergence. Bullish divergence is basically the opposite of bearish divergence. So on our price chart, price is making a lower low, and on our RSI, it's making a higher low. Okay, so first point, price is now testing the descending resistance line, which is basically a descending trend line, and we're wondering if it will break out of it. But we see RSI descending line breakout over here right before this. And number 3, the recent bullish divergence further suggests that we could be seeing a strong reversal or breakout of this descending trend line. Okay. So we have a successful breakout of the descending resistance line as forecasted by our RSI. Okay, any questions? Okay, that's great. Let's continue. So lastly, is this our last part? Okay, I'm not sure if this is our last part. But okay, next we are taking the trade. So firstly, if we look at the different news events, so bringing us back to our first point where I mentioned that when you're day trading, it's really important to look at your fundamentals and take a look at your economic calendars. So in this example, we are using the US unemployment claims, which occur 12:30 p.m. GMT every Thursday. We also have the central bank interest rate decisions. Okay, so in this example, on the 15th of June, we had the unemployment claims, which was over here. You can see Thursday, 15th June at 12 o'clock, we can see this drop over here. Okay, because of the unemployment claims data. Okay, and this is on our DXY. So we see this drop. If we recap, go back to what we talked about for the MACD, you can see price cross over here, right? The signal line and the MACD line, price crossed over. And then we also see this red histogram, the red area. So very bullish signals, and you see price drop at that timing. But if we look at gold, you see here XAU USD, this is gold. And you can see that on the other hand, on the same day, at the same time, gold actually shot up. Okay, you can see if we're looking at our MACD, price signal line cross over the MACD line. Okay, and also it's giving us a green histogram area. So very bullish signals, and you see price shoot up at the same time. Okay, so this is just because gold tends to be negatively correlated to the DXY. Tends to be, not always, but yeah. So that's why it's important to keep up with your fundamentals and take a look at these as well. So if maybe I'll just sidetrack a little bit and show you guys this correlation table from my FX book. Okay, so you can type in, so I think normally we use 80%. So if it's on negative 80, So currencies with correlation lower than 80% and higher than 80%. Okay, we're day trading, so I'll just use 1 day. Okay, I can't remember if it's 80 or 70%. If you guys know, let me know in the comments in the chat. But yeah, so it highlights those that are really strongly negatively correlated or positively correlated so that you can check them on your charts. So if you can see one that is really strongly, maybe like this 90%, the Euro AUD as well as the AUD franc are pretty strongly negatively correlated. So you can expect when price goes up on one, the other will go down. Okay, yeah, it's just a bit of a sidetrack for you guys to take note. Or if you guys are curious. Okay, let's get back to our slides. Okay, so another example here is the FOMC meetings. So just now, I think I mentioned we're talking about central bank minutes. So central bank minutes for FOMC meetings often come with your interest rate increases, interest rate hikes, or even if they stay the same, those tend to be released during FOMC meetings. So you can see on the 14th of June at 6 p.m., at that time, you can see MACD line and signal line crossing over each other and giving us a bullish signal. You can see price also shot up. Okay. Oh, yes, this is the DXY. So because I mentioned earlier that they tend to be negatively correlated, you can expect price to drop down for our gold at the same time. Okay. And you can see here that it is a little bit laggy because the drop really happened a little bit earlier, but our MACD was only able to catch it a bit later. So just take note of that if you intend to use the MACD. But otherwise, you can see that it's pretty useful in helping you to catch any changes in trends, which tend to be quite frequent because the market is pretty volatile during news releases and during events, which is why it's important to keep up with your fundamentals or look at your economic calendar. Okay. Again, another example, 12th of October, we have the unemployment claims. Once again, can see price shoot up at 12:30 p.m. for our DXY. So you can probably expect it to drop as well on our Euro US for our gold. But in this case, we are talking about Euro USD, and price is dropping as well. Okay. Basic day trading techniques. Okay, so we kind of went through a few of these already. Okay, but yeah, we'll just talk about them a little bit. So basic day trading techniques, we have the first one, which is following the trend. So anyone who follows the trend will buy when prices are rising or short sell when they drop, which is normally what we recommend, to just follow the trend. And that's why it's important to look at the different time frames as well. But this is done on the assumption that prices that have been rising or falling steadily will continue to do so. Contrarian investing. This strategy assumes a rise in prices will reverse and drop. The contrarian buys during a fall or short sells during a rise with the express expectation that the trend will change. So you can see why we typically recommend the first technique. Okay, trading the news. We also highly recommend trading the news because investors using this strategy will buy when good news is announced or short sell when there's bad news. And this is really closely linked to investor sentiment as well, which of course can affect the market's volatility as well, but can also lead to higher profits or higher losses. Okay, that's all for our slides. But we still have a little bit of time, so let me know in the chat if there are any charts that you guys would like me to go through. I think we maybe have time for one or two. Maybe we will just take a look at gold first. Okay, and then if you guys have any requests, just let me know in the chat. Okay, so if I'm day trading on the 4-hour time frame, right, I would look at the 1 hour time frame maybe. I mentioned earlier the higher time frames I would look at would be the 4-hour and daily time frames, okay? Because factor of 4, factor of 6, or multiple, sorry. Okay, so let's take a look at our daily time frame. Okay, on our daily time frame, we have this multiple swing high here. Okay, we also have this ascending trend line. And you can see prices are pretty bullish over here on our daily time frame. Now on our 4-hour time frame, you can also see prices are really bullish. Okay. But there is a resistance level here. Okay. That price is currently testing. Now our 1-hour time frame. So this is where I'm gonna go in and do our analysis. Okay, so I'm just gonna place my first support here. Second support here. Oh, first resistance. Second resistance here. Okay, second support here. So these are just purely graphical. And then now I'll go in with some Fibonacci levels to support my graphical levels. Okay, and I can see my 22.6 lines up with my second support. Okay. Okay, I'm looking for a retracement. So for retracement, we use these 5 levels. Okay, and I can see my 50% lines up with my first resistance. Okay, my 78.6 also lines up with my second resistance. Okay. Okay, my second resistance is a pretty significant level. Okay, you can see I can pull it all the way back. Okay, I'm just going to highlight this area here. Okay. Okay, now I'm going to go in with some indicators. So I like to use Ichimoku and MACD because at first glance it tells you exactly what the signals are. So MACD you can, or rather Ichimoku, you can see price moving below the cloud. Okay, let me see if I can zoom it in. Yeah. So you can see price moving below the cloud, and on our MACD, can kind of see price moving below, or rather price crossing over already as well. Okay, so overall bearish for both of these signals. So I can go in for a sell from my first resistance to my first support. But I'm gonna go in just to double check. I'm gonna go in with another indicator as well. Okay. So it's really important to have a bunch of indicators that you're really comfortable using because there are so many indicators out there. So a bunch will tell you that it's bearish, and then the other half will tell you that it's bullish. So as long as you know how to use a few indicators, and then you just test them whenever you are done with your analysis, your graphical and your Fibonacci analysis, that would be enough. Okay, so I can see my RSI, I have a descending trend line as well. So very bearish over here. So I'm going in for sell from my first resistance to my first support. Okay. Okay, we have a request for US oil. So I'll just go ahead and do that now. Okay. Let's see on the 4-hour or 1-hour time frame, which of these gives us a clearer graph, clearer chart. Okay, I think the 4-hour gives us a clearer chart. Yeah, let's go ahead and do that. So starting with our weekly time frame. Okay, trend is pretty bullish. Okay, except for this reversal here. Daily also, is this a trend line? Okay, no trend line, but also pretty bullish. Okay, in just the trend, but just if we just look at the trend alone. Okay, but here is pretty bearish. Okay, let's see if we have any trend lines. Okay, we do. We have this ascending trend line. Okay, but it's currently testing this trend line. So we'll go ahead and take a look at that in a bit. This is my first support. And my second support, maybe this. Yeah. Yeah. Okay, and then my first resistance. And my second resistance just here. Okay, now let's go in with our Fibonacci levels again. Okay, I have this 61.8 that lines up with my second resistance. And my 61.8 also lines up nicely. Then I'm looking for another retracement, and I can see my 60. Okay, my 50% lines up with my first resistance. And here, my 61.8 also lines up with my second resistance. Okay, now let's go ahead and look at some indicators. So same thing, price is moving below the Ichimoku cloud, so it's giving us a bearish signal. MACD is also giving us a bearish signal. Let's see RSI. Okay, RSI isn't really telling us much. Let's look at stochastic. Okay, stochastic, you guys can see this hidden resistance that we talked about earlier. Okay, and we see that price has made a lower low here. Okay, so this means that we can continue to expect price to continue to drop. Okay. Okay, maybe we can look at another indicator. We see price crossing over each other. Okay, price is moving below the EMA and SMA, so it's a bearish signal. I thought we could see a trend difference if there is a crossover, but the trend difference has already occurred. Okay, so overall, all of our signals are pretty bearish despite this ascending trend line. Okay, so we can expect it to continue to drop or to break out of this ascending trend line. I'm going to remove that so it's not so messy. So drop and continue to drop towards our second support. Okay, but I want to mention that we might see price reacting off of this level at our first support because we have a confluence area here with the swing lows and also with the 61.8 and the 100% Fibonacci projections. Okay, so we might see price reacting off of our first support. But overall, there's still a lot of downward pressure. So we can probably expect it to break out the first support and head towards our second support. Okay, and that's it. Yeah, let me know if you guys have any questions. If not, that's all the time we have for today. Thank you guys so much and have a great rest of your week. And I'll see you guys next week. Bye everyone. Bye, Yuria. Thanks for coming. See you next week.